Hello students, today we discuss an accounts question that came in the previous year exam held by the Assam Higher Secondary Education Council. The question we have is, on 1st April 2019, Chaudhary Traders and Company purchased a machine for Rs 1,40,000. On 1st October 2020, it purchased another machine for Rs 20,000. It writes off depreciation at the rate of 10% per annum on diminishing balance method. Accounts are closed on 31st March each year. With this given information, we have to prepare a machinery account, and that is for 3 years. So this is a question of machinery account. What are the information given? The name of the organization or the business is Chaudhary Traders and Company. They have purchased the machinery worth of Rs 1,40,000 on 1st April 2019. Then again on 1st October 2020, it purchased another machine of Rs 20,000. You see, this is the first year. This is the first financial year, that is 1st April 2019, and it will go till 31st March 2020. So, and in the second year, that is 2020, another machinery was bought. Okay, then what is said? The business writes off depreciation at the rate of 10% per annum. That is, for 1 year, the business writes off depreciation 10% of the value of the machinery. And it does so in the diminishing balance method. So now we have to prepare a machinery account with this given information. The answer here seems something like this. This is a machinery account. So we write the title here. This is the debit side and this is the credit side of the account. Again, what is a machinery account? It is an asset account. So it will always start from the debit side, because on 1st April a machinery of Rs 1,40,000 was bought. That is why we debit the account with to bank account Rs 1,40,000. Then again, because the business writes off depreciation at the rate of 10%, we do the same. That is, we write off by depreciation. We write in the machinery account by depreciation account, and that is at the rate of 10% per annum on 1,40,000, and that becomes a amount of Rs 14,000. This is the depreciation amount. After that, what do? We take out a total. We write again. Always remember, an asset account will always have more in the debit side. That is for this side, 1,40,000, and we will always have the lower value in this side. So when we subtract 14,000 from 1,40,000, we get 1,26,000, and that is the balance of the machinery account at the end of that accounting period. So that is why we write by balance CD Rs 1,26,000. And we were told to prepare a machinery account for 3 years. This is the machinery account only for the first year. So now the balance moves to the second year, that is, it starts from 1st April 2020. So the balance here is 1,26,000. But again, on 1st October, another machinery was bought with Rs 20,000. That is why we write again to bank Rs 20,000. Now again, we have to write off depreciation. So here we do, at the end of that accounting period, we do by depreciation account at the rate of 10% per annum on 1,26,000 from this value. So on 1,26,000, we get a 10%, that is ₹12,600 rupees. That is the depreciation value. Then for the second machinery that was bought on 1st October, we calculate a depreciation for 6 months. Why? Because it was bought on 1st October. Not in the beginning of the year. If it would have been bought in the beginning of the year, then we would have calculated the depreciation for the whole year. But it was bought only on 1st October. And when we calculate from October till March, there we have only 6 months. That is why we have calculated the depreciation 10% per annum on 20,000 for 6 months. And that becomes an amount of rupees 1,000. Again, this side will be bigger because it is an asset account, that is 1,46,000. From there we will deduct 12,600 and 1,000, and after deducting we will have a balance of rupees 1,32,400. That is the balance at the end of the year of the machinery account. And this was the account for the second year. Now this balance will be transferred to the third year. So we write to balance BD, and that is the amount is 1,32,400. Again, on the third year we will calculate depreciation. So we write here by depreciation account 10% on 13,400. And how does this amount come? This amount comes when we deduct from 1,26,000 the depreciation amount of last year, that is 12,600. Then we get this amount, that is 11,340. Similarly, we calculate depreciation for the second machinery as well at the rate of 10% on 19,000, and that is rupees 1,900. Now again this side will be bigger, so we write it here 1,32,400, the amount here, and we write it here again, and from this amount we deduct this two amount and we get a balance of 1,19,160. So this is the balance at the end of the year. That is why we write by balance CD. So this is our machinery account that we have prepared for 3 consecutive years.